All right, welcome back to another edition of Financial Accounting. Before we jump into 2.5, a couple administrative things I want to go over. First and foremost, big elephant in the room. We've got an exam coming up this Friday. It's held during class time. We'll talk more about the exam, the procedures on Wednesday. So you want to make sure you come to class ready to ask any questions about the material, about the exam, or whatever. The review will be fairly short and succinct, but it's the first exam, so I know a lot of you guys are nervous. That's what I give this class time for. Make sure that you have Proctorio installed with your Google Chrome. A way to determine that is through the Proctorio test run assignment, which is due tomorrow, along with Learning Objective 2.5 homework. We'll finish talking about 2.5 today. On Blackboard, if we go to the home page, you should have gotten an email from me regarding the information for exam one folder. When you go inside there, you'll see there's a set of review notes, which we'll go over in detail on Wednesday. You're welcome to look in there to see what is going to be tested on the exam and how the exam is going to go. 21 questions, multiple choice, things like that. We'll talk about that in more detail. There are practice exams, one with Proctorio, one without. I strongly recommend that you do the one with Proctorio at least once to make sure that all your technology requirements are good to go for Friday's exam. One thing to keep in mind about the practice exams, these are not meant to be homework assignments. So they're a chance for you to see how prepared you are to take the exam. So if you find that you're scoring like 50% when you take it on the first two attempts, that indicates that you need to go back, review your notes from class, review your homework assignments, and review the textbook if need be. That's where the work is done. The work is not done here in the practice exams. Generally speaking, if you do the practice exams 10 times, it becomes pointless because you'll start memorizing the questions at that point. So 2 or 3 times usually is sufficient. You don't want to overdo it because you want to make sure you're focusing on other tools to prepare you for the exam. The Proctorio test run assignment is here. If you do have difficulties with using Proctorio, take a look at the guides that will help you sort of debug what's going on with Proctorio on your side. Make sure you get that assignment done by tomorrow evening, Tuesday. My grades, I have updated your grades for your homeworks 2.1 through 2.4. So just double check to make sure that I've given you the correct amount of points out of 2 on those assignments. Your Proctorio assignment will be out of roughly 2.00003. That's all, but basically it's 2 points as well. Then double check to make sure that you understand where you stand with the course. If you have any questions about that, please let me know. We need to jump into 2.5. This is the fun part where we talk about the trial balance. But to give you an idea about where we left off, we were working on the journals and the ledgers, and they were kind of going hand in hand. First, we post to the journal, then we post to the ledger, and then from the ledger, we have to ask ourselves, okay, what do we do with all this information? How do we begin summarizing all this stuff? And the way we summarize this information is by creating the trial balance. So we're going now from the ledger into a new document. So we did journal, then we went to the ledger. Now we're going to do trial balance. Trial balance lists all of the individual accounts with their balances. So we don't need all the T account information. We just need the ending balances from the ledger. We're going to start by listing the assets first, then liabilities, then equity, and so on. One benefit about the trial balance, it allows us to see that total debits equal total credits at the very bottom. We'll take a look at that through an example. Usually we prepare this at the end of the period right before we produce the financial statements. We need the trial balance because the summary of those numbers helps us figure out what goes in which financial statement. So how does this process work? Well, you go into the ledger and you start with assets, and you start with the very first account, cash. You're going to go through current assets first, then long-term assets. So the cash balance is a debit balance of $33,300. So when you go over into the trial balance, this is the trial balance, and more importantly, this is the unadjusted trial balance. We'll talk about how we adjust these numbers in chapter 3, but these are essentially the raw numbers We're bringing the raw numbers directly over into the trial balance. So there's a $33,000 300 balance, debit balance for cash. So just write down cash, and then under the debit column, make sure this is the key thing, plug in that amount, and then repeat that process for accounts receivable, debit balance 2,000, supplies, debit balance 3,700, and land, debit balance 18,000. Generally speaking, when you see that the assets are lining up appropriately on the debit column, you see that you have normal balances. If any of these particular accounts have a credit balance, okay, let's just say, for instance, we overdrew on our checking account, our cash account. If for whatever reason we saw that we had a weird credit balance, you would still go ahead and stick it in there on the credit side. Okay, you would do that, if anything, just to highlight the fact that something is very abnormal about that balance. If it is weird or something's wrong with it or just appears abnormal, don't worry about that. It may require an adjusting journal entry, which we talk about in chapter 3. So for right now, just be aware that this is a mechanical process. Take some time just to practice it, but generally speaking, this is housekeeping. Important part is once you get through all the assets, this is my recommendation, is put a little line break after that last asset account, because you don't want to build up so much momentum that you just automatically just start listing everything as a debit. I've done that before and it's frustrating. So you want to make sure that you give yourself a clear break to say, okay, stop and think, where do you need to transfer now? We're in the liabilities. Once we've gone through all the assets, we go to liabilities next. Start with current liabilities. There's only one liability account. This is the accounts payable account. And normally it's a credit balance. So be careful when you transfer that information over. Make sure it ends up on the credit side of the trial balance. This is usually where people make a mistake. They get a little careless, or perhaps they incorrectly did their T accounts where they switched the columns. Be very careful. This make sure that you're doing it right. After we get to through all the liability counts, next we move into stockholders' equity. Stockholders' equity generally starts with common stock. That's the owner's interest in the company. Okay, we printed off $50,000 worth of stock certificates. So what do? Right below the liabilities, we start showing our common stock account. We know that liabilities and equity accounts have generally the same credit balance, but it's always just kind of good to sort of give yourself these little line breaks just so that way you know where you're at in this process. 50,000 goes on the credit side. And one thing I want to point out here is something you don't see. Typically, if the company has been in business for several years, usually what you'll have is a balance in retained earnings. If there is a beginning balance, this is what we would see. If there's a beginning balance in retained earnings, we would want to create a line item for retained earnings and show that credit balance on the trial balance, that being beginning retained earnings, the beginning balance of retained earnings. You don't see that here. We don't have a balance in retained earnings yet because we just started the company. So in this case, because we don't have a retained earnings balance, it's okay just to leave that row blank, or better yet, just skip and move on to the next account. But later down the road, when we have retained earnings, a beginning balance of retained earnings, that's where we would typically place it, right below common stock. Once we do common stock, and if there is retained earnings, then we move on to dividends. Now, dividends have a weird balance. They have a debit balance that looks a little strange, but realize dividends are paid out of retained earnings. We don't have a retained earnings balance yet, but we do have net income. We'll get to that in a second. For right now, just make sure that you're following the rule. Transfer the account balance to the trial balance and make sure, especially right here, make sure you get the appropriate amount in the appropriate column. Dividends is an equity account. It's a temporary equity account. We'll talk more about that in chapter 3, but just make sure that you're not getting so hasty that you plug it in the wrong column. Once we get through all the equity accounts, again, my recommendation, put a little break there. Start going through the income statement accounts, starting with first revenue. Revenues go up at the top of an income statement. So start with revenues. We have a $10,000 balance. So write down service revenue and make sure you go all the way over to the credit column. Plug that in. There's no more revenues, then you move on down to expenses. And there's a lot of expenses here. So you got rent expense, salary expense, utilities expense. You just want to start listing these off. Generally speaking, you don't, no order, you don't have to follow some sort of specific order when inputting your expenses. So if you come across any issues with your homework in respect to how you list all of your expenses, just make sure that generally speaking, you want to follow this, the sequence of how the expenses appear in the ledger. Some people say that expenses should be listed in terms of the highest balance to the lowest balance. That shouldn't be the case. Generally speaking, you just list them as you go. Transfer in the debit balances because expenses are usually debits. And then when you do that, you should be at the end of your trial balance, where now you can do a summation. That's what that little E represents, is a Greek symbol for summation. If we sum up all of our debit balances from all the individual accounts, we'll come to a balance of 61,800. Hopefully, when we sum up all the credit balances, those sum up to 61,800. If they equal, that's a good thing. That's what we want. Total debits to equal total credits. Generally speaking, we're 99% sure that we're free of errors when that happens. This process, what we just did here, is no different than what we ended up doing in the previous class. So recall from our previous session, we actually went into the ledger. Remember, this is the ledger where we have all these individual T accounts. And what we did was we just summed up all the debit balances, and we got a debit balance of 61,800. We did the same thing with all the credits. We got 61,800. Those equaled. That was a good thing. You don't need to do that. When you look at the ledger, you don't need to go through and just sum them up here. Just wait and sum them up when you produce the trial balance. Hopefully, if you've done everything right, if you've done the debits equal credits on the journal, the debits equal credits on the ledger, and by the time you just transpose or transcribe these numbers into the trial balance, they should all work out okay. 61,800 equals 61,800, just as we saw before. Now we got all this information in there. One thing to keep in mind is, I have to make this point, is that when I was initially learning about accounting, a lot of these rules didn't make sense. What to debit, what to credit. For sure, this is very confusing for a lot of people. Why are we debiting cash when we get cash? It's just a rule. But one thing I can say is that I was just following these rules, and then by the time when I got to this trial balance, all of a sudden things started to make sense, what I was doing. All the assets had debit balances, and those assets were claimed by creditors, debt holders, and owners, equity holders. So all of these items, the dividends, revenues, and expenses, all that represented retained earnings, which essentially are claimed by the equity holders as represented by certain assets. But this was ultimately what was coming down to, was trying to figure out why we're doing debits and credits. We're just trying to show that mirror imaging effect. Assets are being claimed by creditors and owners. Creditors being like banks, equity holders being like stockholders. They have dibs on certain amounts of assets. So when I took a step back and saw that, all of a sudden the rules, even though they seemed kind of crazy, started to make sense. They just work. They just work. Once we get the trial balance completed and we have our balance of 61,800 below, now what we want to do is work from the bottom all the way up. So we'll start down here looking at all the income statement accounts to produce our first statement, the income statement. Recall from chapter 1 that we produce the income statement first, then the statement of retained earnings, and then the balance sheet. So income statement goes first. Let's start pulling in the numbers from the income statement, from the trial balance, the revenues and expense numbers. Expenses offset revenues. So when I sum these together, I should get a net balance. Because my revenues are greater than my expenses, I have net income. Generally, that's what I like to see is net income. That's a good thing. After I've done that, I'm done with that portion of the trial balance. I can now move into the next statement, which is the statement of retained earnings. But before you get carried away, again, realize that typically what you want to do is go to the trial balance to see if there's some sort of beginning balance in retained earnings. If there's a retained earnings account number here, retained earnings account line item, and there is an amount on the credit side, that's what you would want to stick as your beginning balance in retained earnings. Because we just started the business, there is no line item for retained earnings because there's no beginning balance. So we can just plug in 0 for beginning retained earnings. We just started this business. Then we can say, well, look, we earn net income. So let's plug that down below. This is, again, hearkening back to chapter 1. And then did we pay any dividends? Well, trial balance shows that. So what we see down below, this ending retained earnings, what this represents is the historical net income minus the historical dividends paid out. So you see this, remember that net income, you've got revenues, which are credit balances. You offset expenses, which are debit balances, and you subtract away dividends, which are debit balances. So in this case, what you see here is $5,200. That's a net credit balance. Retained earnings is normally a credit balance. Why? Because when we look over here, liabilities increase with credits, equity accounts increase with credits. We expect them to have a normal credit balance. It makes sense that we have a retained earnings balance that will ultimately be a credit balance. So, because it gives us an idea that are we headed in the right direction? Does it make sense to have a credit balance in retained earnings? Yes, it does. So we'll see more practice of this in chapter 3. But for right now, everything is looking good. After we do the statement of retained earnings, then we move into the balance sheet. My recommendation is before you start popping in information from the trial balance, start in this case with ending retained earnings. Go down into the balance sheet under equity and plug in the ending retained earnings balance. Usually you don't see it called ending retained earnings. It's just usually just called retained earnings. But it's important to know that the balance, when we look at the balance sheet and we see an amount of 5,200 as retained earnings, what that really represents is the ending balance of retained earnings, meaning that we have historical net income minus historical dividends plus current year net income minus current year dividends. We didn't have any of the historical stuff. We just have current year net income minus current year dividends. That's what that 5,200 represents. It represents everything through the end of the most current period. Once you get that in there, now you can go back to the trial balance and start popping in all this information. Assets, then go to liabilities, pop in common stock. When you do that, as a final check, just take a step back and ask yourself, do assets equal liabilities plus equity? In other words, does the 57,000 total assets equal the sum of these guys? 55,200 plus 1,800, guess what? Equals 57,000. That's good stuff right there. So overall, what is this telling us? Well, when we're doing our journal entries, we have to make sure that debits equal credits. If they don't, it means we made a mistake. Then when we post that information to the ledger, we have to make sure that the postings, the debits equal the credits when we post the information into the ledger. Then when we produce our trial balance, we have to make sure that the sum of the debits equals the sum of the credits. If it doesn't, we made a mistake, we have to go back. As a final check, when we're doing our balance sheet, we want to make sure that assets equals liabilities plus equity. If we've done all of these things, generally speaking, we haven't missed anything. But it's somewhere in this process, if we do see an imbalance, that's where we have to kind of go back If there is an imbalance, what we need to do is go backwards. We need to what's called drill down. Financial statements are a high level overview of the business, what the business did, how they did performance wise, and where do they stand as a point in time? What's their financial position? If we, for whatever reason, we need more detailed information about any of these accounts, we need to go down, drill down into the details, go back to the original diary, find the journal entry to get more understanding of what's going on. That can happen. As an auditor, I had to do that. I had to ask for support. Tell me this $2,000, where did that come from? And the people who I audited had to give me the information about the journal entries and the ledger accounts to provide support behind that stuff. So this is all just a system. This represents the accounting cycle, starting with analyzing, identifying transactions, analyzing them, recording the journal entry, posting it to the ledger, using the ledger balances to create the trial balance, and then using all that information to produce financial statements. Chapter 3 will talk about different other things we have to do with the trial balance, adjusting journal entries, adjusting balances, etc. But the process is basically the same in producing the financial statements. So more on that will come later. But in the meantime, those are all the notes for 2.5. If you have any questions, please let me know.